Hey traders, Clifford back with another video on trading the charts. So today I wanted to take a step back and go over what I believe to be one of the best formations in Japanese candlesticks that you can trade to find great trading opportunities and actually catch some really good moves with them. And that is known as the hammer and the shooting star. So with that being said, let's rock and roll. Okay, so on to the Japanese candlesticks. So basically, there's many ways you could trade the market. Whether you're trading stocks, futures, forex, doesn't really matter. These candlesticks are basically on all charts. But I believe that Japanese candlesticks are one of the best ways of trading in technical analysis. Now, of course, you could use bar charts like this. And you got the open, high, low, close. You could definitely trade off of chart formations with bar charts. Some people use line charts. I don't know why you would even want to use that, but then we got candlesticks. Candlesticks are one of the most well-known, prominent ways of trading, and that's because every candle basically you actually see the buying pressure, the selling pressure much better in the market. But more importantly, you also see formations as they happen. And now there's many different types of. I'm not going to make the video really long about all the different candlestick formations you could trade, that they came out with in Japan and all the Japanese candlestick formations, because there are a lot of them. If you really want to get into it, definitely read a book on Japanese candlesticks, because there's quite a few formations. But in my all the years of book, all the books I read, all the seminars I took, and all the money I spent on education, I learned two formations that work for me really good. And one of them is called the hammer. The other one is called the shooting star. So that's what I'm going to go over with you guys today. So basically what it is, the hammer is a reversal formation. Basically, I only use the daily charts. You could use any time frame you want. If you want to try a lower time frame, definitely you'll see those formations happen. You'll see these formations happen on lower time frames as well. But I like to use the daily charts because I believe that they are the most reliable, because I see the full trading session, what happens in basically the whole day, where the buyers and sellers push the market. So I believe that they are the most reliable time frames is the daily. So that's how I'm going to show you how this works. So here's a daily chart of I don't know, what are we looking at here? The euro. All right, we'll use that. So here's the euro. So what a hammer is basically every candle represents one day of trading. And what happens with a hammer is, you have the opening price of the market, which is on the left side. And then you have the high for the day and the low for the day. But what happens in a hammer, if I zoom in here, is basically the market opens, here. Okay, market opens here. The sellers push the price all the way down to here. But then the buyers come back in and push it all the way back up, forming what basically looks like, you got it, a hammer. This is why they call it a hammer, because it's hammering out a bottom in the market, right? It's kind of like a bottom formation, but it's a reversal, because if the market opened here, sellers pushed it all the way down, buyers rejected all the way back up to close here. Basically, the market's trying to tell you that they're not going to let it go lower. Okay, so that's basically a hammer candlestick formation right here. Japanese candlestick hammer formation, right? So how do you trade it? Well, basically, the way you trade it is, there's two ways you could trade it. You could go conservative, or you could go aggressive. I go aggressive. As soon as I see a hammer and the candle completes, I go long the next day. I just, I mean, I'm all in like that. Of course, I don't risk my whole account, but I believe that aggressive is the best way to go with these hammers from what I've seen over the years in the market. But if you want to be more conservative, you could put an order to get in on a 50%. So a lot of times the market will come back and test about halfway on the candle. And I'll show you an example of that in a minute. And you could actually get a conservative entry right in around here, about a halfway point of this candle. Okay. Now, so that's basically the hammer. But let's talk now about the shooting star. Now, the shooting star is the opposite of the hammer. By the way, one other thing I forgot to mention. Typically, hammers are great when you're on the right side of the market. So if you're in an uptrend and you see a hammer form, that's a good indication that the market's going to try and push higher. It doesn't always happen though. We could be wrong, and it could, the market could reverse the opposite direction. That could happen too. But a lot of times, like look at this one here. Here's one on the S&P 500. This is the best way to trade the hammer. You find the trend, and then you wait for a pullback to the trend line, which was about here, and then boom, here's the hammer. See how that formation, see how that candle looks totally different than all these other candles that we had? Because it hammered out a bottom. So you go long on the next day, right about here. And as you see, this was a great trade. This is actually recent. Um, and look, here's another hammer. Could have taken this one too and still made money, actually. Okay. Now, one thing I will say, when you trade the hammer, you definitely want to have an entry strategy and an exit strategy in case it goes against you. So what I do is if I'm buying on the next candle here, I will put my stop behind the wick of this candle here. So if you buy on the next opening day, right? You buy on the open of the next day because you got your hammer and you're convinced that the market might move higher. You buy on the opening of the next day and put your stop behind here, behind the wick. That's the best way to go because the market has already proven to you that it's probably not going to hit this level again because it already hammered out the bottom. And as you see, look, it came back down about 50%, which is what we talked about earlier, and then it was a winning trade after that. So you would have been fine. Let's talk about the shooting star real quick. Shooting star, opposite of hammer. So if the hammer is a reversal into a bottom formation, then the shooting star is the opposite. It's a reversal and it's a top formation. So similar to the hammer, it's the opposite. It looks something like this. Flip a hammer upside down and you have a shooting star. Okay, and again, same thing. You're looking. So we're in a downtrend. I mean, this is whatever. What am I looking at here? British pound, whatever. I mean, all right. I'm looking at the pound, but we're in a downtrend on the pound. I got my trend line, and as you see, the shooting star tested the trend line, rejected it. Now it's the opposite. So buyers came in, pushed the price all the way up. Sellers came in, pushed the price all the way back down, reversing the day's buying pressure to close here. So what do? You go short on the next day, and boom, as you see, it would have been a winning trade. Now, there are times that hammers are not going to work out and shooting stars are not going to work out, and you're going to take a loss. And hey, that's the trading game. Never risk more than you can afford to lose. Always keep risk management in mind when you're trading any asset class. Here's Bitcoin. You see these now? Let me show you a little hammer here. Okay, so here's one. So here was an uptrend line I drew in Bitcoin, and right about here there was a hammer. And look, if you buy on the open in the next candle, put your stop behind this wick. You might have. What I do is I put my stop even a little further behind the wick, maybe down here, because this is the trend line. You always want to keep your trend line in mind. So, put the stop down here. And as you see, it was never in danger. And look at this move you would have caught. Incredible. What's another market? Here's oil. Let's see. Any hammers in oil? Now, again, everyone may have their own idea of what a hammer is. Technical analysis, again, it's a little bit like art. So, what I see on my charts, you may not see, but eventually, as your eyes get sharper, you're going to see these things. I mean, I'm just looking around here to try and find another one. And they're not all perfect either. I mean, okay, look, so here's the US dollar, right? Here's the US dollar I watch. And look, here's a hammer right on the US dollar uptrend. Boom, you buy on the next day, put your stop behind here just in case you lose money because sometimes you're going to get stopped out. It's going to happen. I never sugarcoat anything in any of my videos, and anyone who tells you that, oh, this is going to be a winning trade, I mean, listen, no one's got a crystal ball. You could lose money. So always put your stop behind the wick of the candle here. And as you see, you wouldn't have got stopped out. But let's look at this other hammer here. This one is also a hammer. I mean, there's again, you're not always going to get the perfect formation. I'm just seeing what else I have here right now. Gold. Let's look at gold, right? Do I have any hammers in gold? Maybe not. Whatever. I don't think I have any here. Dollar yen. Here's another one. So here's kind of like a hammer formation. I would have taken this. Why? Because it's in line with the uptrend. So again, I mean, it's just a basic introduction for you guys who don't know about hammers and shooting stars. They are highly reliable. I mean, but just because you see one form on your charts doesn't mean you want to bet the farm or anything. But it does mean you definitely probably have a good percentage, a good probability that the market will move in your favor. Now, so putting it all together, I would say this: hammers and shooting stars are great formations to trade with. However, you don't just want to pull the trigger when you see one. You want to use all the tools you have at your advantage. From my previous videos, if you've been watching my videos, that I'm a very big believer in Fibonacci. So where's the best place to look for a hammer? At the Fibonacci levels, because you see this level right here? Here's the 50% Fibonacci level. See how that hammer formed right there? That's a beautiful entry, in my opinion, because not only is it a hammer, not only is it in line with the uptrend, but it's also rejecting the 50% retracement level, which tells you that the market most likely wants to move higher. So when you trade these hammers and shooting stars, look at support and resistance levels. Look at Fibonacci. Look at where the trend is. And you're going to see that a lot of times, if you're on the right, if you drew your trend lines out and everything, and you're watching the Fibonacci levels, you're going to see that a lot of times these can be excellent signals to catch some of the biggest moves in the market. So that's about it for this video. If you like the video, feel free to like, subscribe, put your comments below. Look forward to seeing you guys in the next video. And as always, my friends, trade what you see on the charts. Trade well.